Eric Muadid, Muadid.com, with a belated part 2 of this weekend's market analysis. I hope everybody had a great long weekend. So let's begin here, try and keep it short. We begin by taking a look at the financial space by way of the XLF, which is still showing a breakout on the monthly above the previous monthly closing high of 24.64. If it can hold above that and also keep its monthly RSI above 69.1, then there's a chance that this could also be pushing higher. Just like we noticed in part 1, a lot of what's going on the dailies is that the daily charts seem to be struggling to hold breakout levels. As you can see here, we are not above the previous daily closing high. In fact, we've moved back below the previous daily closing high, so this breakout is in question on the daily. We also see that the daily is struggling where it's been struggling for a while. If you draw a line like that, you can see that this was the high, or at least a short-term high here, and now we seem to be stalling around here. So the dailies, again, we continue to see this theme where the dailies are stalling, even though the monthly looks like it's breaking out. Take a look at the Airline Index, which has a similar chart to that of the Transportation Index. You can see it had a big drop last week, about 6.5%. But curiously, we come back to a level where it's been holding the 50. Just to show you some examples of where it's been holding with uniform activity back to the 50 and holding. And so we can see even this recent drop here. So what I'm getting at here, yes, it was down a lot. And maybe this is part of the market that is going to be the one leading the market lower. We don't know that. But if we take a look at a long-term picture, this market is not broken as far as the Airline Index is concerned, just like the transports. A couple of lines to note: if you take the lows here in 2011 and draw them something like that, even that we haven't broken below this trend line. There's also a back test line going back to this breakout here, and we know that this breakout in late 2012 began this nice move all the way to new highs. So if we extend this line, we see that we come in contact exactly to where it's closed this past week, so something around here. So that's another line where that could be showing that the Airline Index, yes, it seems to be breaking down, but it could be just coming back to test a prior breakout. And there's also another line, and I'll show that line to you here in a second. It's somewhere around here, right there. As you can see, there was a breakout here which began the move right, let me get that right there off the lows here. And so if you draw a line which is a green line from there, you see that it gives us support on this line again here, double bottom support here, and came close here. Of course, uniform activity below the green line back above it, and you can see that we closed exactly there on Friday. So this is triple line coming in contact at the same point. My thinking here is that more than likely the Airline Index is telling us, yes, it's pulled back, but it's not broken. Of course, if we start breaking below, for example, if the Airline Index breaks below this trend line here, then that could be a problem. Right now, we haven't seen the break. We have to assume that it is, yes, down, but not broken. Another market that looked suspect at the end of last week is the real estate sector, the IYR. Keep in mind that the Dow is trading relatively close to its highs here, but this instrument is trading way off its highs. So, the question here is that are the airline indexes, index charts, and the transports in general, and the real estate markets leading the market lower, or is this just a pullback before they catch up with the rest of the market? We can see here that it's been finding again support around the 50, and we are still trading generally around the 50. If we can move back above the 50, then here's another market that could find support. If we take a look at the daily, we see that the daily already gave us a buy signal based on this previous entry of the lows of October. We just draw a line from there. You can see this market has used this level again for re-entry and double bottom here. So double bottom, uniform activity, and then this lows here. So we've already seen the bottom. Day to day, we can say that this is pretty much no man's land. We are trading below the 50-day moving average and above the 200-day moving average. So it seems to me like sideways for now. But in terms of giving us some little bit of support on the downside, as long as the market is holding above this green line, this should be good enough to stem any further losses in the here and now. Yet another market that is breaking out is the Semiconductor Index, which is above the previous monthly closing high. Again, the level here is 114.65 or 0.65. It looks good because the monthly RSI is above 69.1. And yet again, we see that if we go to the daily, just like the main markets, if we draw a line connecting the highs, it's coming back to test this level here. So yes, on the monthlies they look good, but on the dailies they do need to take out this RSI resistance. So for the market to continue moving higher, bulls need to see a breakout above that line. Otherwise, if this becomes resistance, there should be a rollover lower over time because of that resistance. So right now, back at the resistance on the daily RSI, here's another market showing that very easily this could turn into pullback, as we saw in part 1 for the Dow and for the S&P 500 on their daily charts also. Let's take a look at the dollar. Last weekend we talked about the possibility of the dollar finding support around the 50 level on the weekly RSI, which is what happened with a nice move on over the last week. And this is just because we had seen that the breakout took place around the 50 here, which began this nice move to new highs and a nice upthrust in the dollar. So it's coming back to test this level here. We can see that held with uniform activity, which means that for now the dollar has a chance of at least seeing higher prices. It's only when it breaks back below the 50 and does not recover that we might start looking at the dollar being ready to pull back. So that was one reason why we thought it could bounce. The other reason was the line connecting the lows like that. So connecting the lows here, 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 close to that low, and it was trading there at the end of last week, and that's where it started to bounce in this very past week. So anyway, what I'm trying to say is that we had seen that potential for a bounce here, and also based on the lows line, which made sense. Normally when we get this support at the 50, it means that there's going to be a good chance that the market is going to at the very least try and take out recent highs. So I think the dollar is going to put pressure on commodities for now until we see different looking chart. For example, if we take a look at the daily here, and we can see the daily is above this backtest line. So this was the line where the dollar could have stalled, but we seem to be trading above the line, which is good. So as long as it's trading above this blue line, I think the dollar has a chance of recording higher levels. And also at some point it's going to have to contend with this downward sloping 50-day moving average. So maybe for short term, let's see what happens when it comes in contact with the 50-day. But based on the monthly looks great. As you can see, the monthly is trading above 69.1, and as long as this is the case on the monthly, I suspect it's going to put pressure on most commodities that trade relative to the dollar. So the dollar looking very strong. You can see here RSI claiming the level back above 69.1. This just means that it is very, very strong. Let's take a look at gold. All right, you see here gold had a big down week. In fact, if we go back and show a multi-year weekly chart, let's go back about 6 years on the weekly. So this is a 6-year weekly chart. Take a line connecting the highs on the weekly RSI, and you can see that it connects the lows here. Oops, connects this low, that high, this high, through this high, and now there. So I think in terms of momentum to the upside, the gold trade is not going to work until it can take out this line of resistance on the weekly RSI. If you go to the daily, you can see that on the daily, we can get that. A couple of observations on the daily. We are trading in what looks like a wedge, connecting the lows like that, and here. Also, we are trading, so we have a wedge here in the price action. We are also trading between the the 50-day moving average and the 200-day moving average. So that's another reason for sideways action. And we had recently come back to the previous break somewhere there. So this break point in the RSI was responsible for the move lower. And so now we can see that if we draw a line from there, we've hit this level once before and pull back, which was here. And we discussed these highs, that this would also be a pullback territory. The market seems to be stalling. So we can see that generally speaking, we're in a sideways market. I don't see anything exciting as far as this is concerned. So until you can get out of this price wedge, it looks like we are trading in just choppy waters for now. It's only when we move outside of this wedge that we might get a directional bet. But generally, I would say this is not the strongest trade, because you can even see that the 200-day moving average is pointing down, which indicates that generally momentum for gold is pointing lower. If we take a look at crude oil, we can see that it still continues trading within this range here around the $60 level. I think the reason why, and I've been discussing this, is this back test. If you draw it something like that, or you can just say the break around the 50. So there was a break level. Once we broke here, which was this break, we see that the market had a big drop. And so around that 50 level, we can draw a line, which is exactly where it's stalling. As you can see, just around the 50 like that. Recently, we've been unable to go above the 50 level. So as long as that's the case, I think crude oil continues to struggle. If you take a look at a longer picture, going back to the 90s, so this monthly chart, and we can see if we draw a line like that, connecting the lows, double bottoms, lows here, touching that low, we need to be above this line here, otherwise this becomes resistance. Hope that makes sense, that we have been unable to recapture back above this level, and as long as this is showing resistance, it indicates more than likely that there's another leg down. Otherwise, if it's gonna do well and recover, we do need to see it move above the blue line. Right now, it looks like resistance, and that's the best way to look at how the crude oil market is trading. If we take a look at the daily chart, if you want to trade this, maybe wait for it to break out. If you want to trade it to the upside, wait for it to move above the recent daily closing high, and that level it should be at 61.17. So 61.17 is a level to watch. If it can jump above that, maybe there's a chance for an upside move. Otherwise, if it's still trading below this level, I don't think there's any reason to be long this trade, because of the way it's trading with resistance on the monthly and the weekly RSI. But if you're gonna get a swing trade, you're better off waiting for it to move above the recent daily closing high at 61.17. Let's take a look at solar, and we see solar had a big drop during last week, and whatever the reason is, this chart is now looking a little bit on the bearish side. Remember, we were playing this long because of this breakout past the previous monthly closing high, and we seem to be back below that. The level that it was breaking out was 45.83, 0.83, which was this monthly closing high. So we are trading below that. You can also see that on the monthly, the RSI is showing resistance, just like it did show resistance here off the highs somewhere there, and now we are showing uniform activity below the line and back below it, which means that this could be a sell signal. So what looked like it was a breakout, and I was looking at this as an area to find ideas, the market seems to have rejected that idea, and since we are wrong, I think this is a busted trade, and either one needs to be stopped out, or at least consider getting out of that trade. Even though the monthly RSI was showing a breakout to 3-year highs, the price and the RSI since then have turned around. So we have a failed price breakout, failed RSI breakout to 3-year highs. So I say this is a busted trade, and we need to move on to other ideas. Another busted trade that we were looking at recently was Uranium Sector. Last week was down about 7%. And we can see that if you go look at the RSI, you see this break point in April of 2014 was responsible for this drop. And over the last month or so, we formed a double top, and since then we can see that we are rolling over and we are pointing down. So that's another busted trade. This will not work out. Obviously, you can still watch any breakout above the recent closing highs, and the level to watch there is, I think, was 11.82. Yes, so 11.82. Just set an alert here in case down the road it can take out that recent weekly closing high, but for now it's a busted trade. If you take a look at the monthly for the uranium sector, you can see again now what seemed like a breakout on the monthly. So right here it looked like it was breaking out, but now it's being rejected. So that's the problem there, that this looked like a breakout. Since then it's failed, so we have to move on to other ideas. All right, let's take a look at 3 stock ideas I have for you, and in this short video, the first one is a breakout on the weekly NAT. The level to watch here is if it can hold above the previous weekly closing high. So weekly closing high of 12.68. As long as it's holding above that, that's a good breakout. You can see that the RSI here is above 69.1 on the weekly. The reason why I like this one is on the monthly. You can see the monthly is already trading at 3-year highs. So 3-year highs here, 3-year highs move, and again another move to 3-year highs on the monthly RSI. Take a look at the MACDs, and both MACDs are trading at 3-year highs also. So from a minimum requirement for the ultimate Moade breakout, this one looks great. Again, the buy point was on the weekly if the stock can hold above 12.68. The other stock is a semiconductor name, VIMC. This one has yet to break out. The breakout level is here on the weekly if it can break out and hold. So right now it's not a buy until it moves above 1401, which is the current weekly closing high. If we take a look at the monthly, we can see that the RSI continues to trade well, trading above 69.10, which is great. So that's minimum requirement number 1. Number 2, both MACDs are already trading at fresh highs. So the minimum requirement is being met. If you want to play this correctly, you have to wait for the weekly breakout above 14.01, which is the weekly closing high going back a couple of weeks ago. The other one is a speculative name, which broke out, or actually closed exactly at the buy point or slightly below the buy point, and this one just needs to stay above. Let me see here what my price level is. Yes, it needs to be above 0.43. So that's where it needs to be. I think it closed at, the precise close on last Friday was 0.425. So it's a speculative idea, that one we mentioned previously. The reason why I like this name is, number 1, I like that nice tight action here. That looks good. But my main focus is on the monthly, where we see that it is pressing and moving to 3-year highs on the RSI, which is what you want to see. It also has a chance of moving above 50. If it can move above 50 on the monthly RSI, expect another surge higher, and both MACDs are already trading at 3-year highs. So the MACDs are at 3-year highs, and as you can see that the RSI is at 3-year highs. So this one, even though it's a low price stock, it meets the minimum requirement, and as long as it can stay above 43 cents on the weekly, this is a good stock for a potential spike. Eric Moade, good luck, peace, and blessings. Woo! See you guys in the new week. I am out. Yeah, EACS.